Very good morning, dear student. We have been discussing about journal, and today I am going to discuss about goods and services tax. So today I am going to discuss about goods and service tax, that is GST. So it is a comprehensive indirect tax. GST can be levied on transactions. It is an indirect tax. It is when it is levied on transaction within the state, it is known as intrastate transaction, and it can be of interstate transactions also. Interstate transaction means when transactions take place outside the state. Intrastate transaction means the transaction take place within the state, right? So if GST rate is 12% and transactions take place within the state, then this GST is subdivided into two parts, CGST and SGST. CGST is termed as central GST and SGST is termed as state GST. So if GST rate is 12%, then it will be divided half, that is 6% for CGST and 6% for SGST. For interstate transaction, that is when transactions takes place outside the state, then GST is collected. GST collected is termed as IGST, that is integrated GST. So the GST paid by the purchaser on purchasing goods and services is termed as input GST. This input GST is not an expense or cost for the buyer because this input GST can be recovered when he will sell the goods and will collect the output GST. It means input GST can be set off against the output GST. So it is an asset for the business because it is recovered. It will be recovered, and from the nature of this account is, as per the model rule, it is an asset, and as per the conventional rule, it is a representative personal account representing the government or tax authority. The GST collected by the seller is termed as output GST. This output GST, what the seller is collecting at the time of sale of goods, is not an income for them, because this output GST, what they have collected from the buyer, it is supposed to be deposited or paid to the government. So it is a liability for the business, and and the nature of this account is, conventionally it is also a representative personal account representing the government or tax authority. So input GST is set off against the output GST, and whatever the balance left in output GST account will be deposited to the government.
Transactions and
So now we will discuss the journal entries which involve GST. Although you have already know what is the journal entry for the purchase of goods or sale of goods, but if GST is involved, when you purchase a good, then the journal entry will be passed: purchase account debited, input CGST account debited, input SGST account debited, to cash if cash you are receiving. If you are making payment through cash, it will to cash account. If you paid through check, then bank account. If you haven't paid, that is to suppliers account or creditors account. If the transaction is interstate transaction, in that case GST is termed as IGST. So purchase account debited, input IGST account debited, to cash if you are making payment through cash. If you are making payment through check, then bank account. If you haven't paid, then suppliers account or creditors account, right? The same way, when you are selling goods, if it is intrastate transaction, means you are selling goods within the states. In that case, if you are immediately receiving the cash from your buyer, then cash account debited. If you are receiving payment through check, then bank account debited. If you haven't received, then buyers or debtors customers account debited. 2 sales, 2 output CGST and 2 output SGST account. The same way, if it is interstate, then cash account if you are receiving cash. If you receive in form of check, then bank account. If you haven't received, then buyers, customers or debtors account debited. 2 sales account, 2 output IGST account. Now I'm taking a transaction on purchase from your book. It is in your book, page number 12.16. Page number 12.16, and it is a illustration number 2. And I'm taking a fourth one. So this fourth one says, purchase goods from Tarun of rupees 1 lakh less 10% trade discount plus CGST and SGST 9% each. Paid half the amount by check immediately and availed 2% cash discount. So if you go through the transaction, the accounts which are involved in this transaction is purchase account is involved. Input CGST is involved. Input SGST is involved. Bank is involved. And since it is 50% cash transaction and 50% credit transaction, so the supplier is involved. These accounts are involved in this transaction. So first of all, before solving the question, before passing a journal entry, first we will make some calculation. So the question says the list price of the goods is, list price has been given is 1 lakh. Now, less trade discount and trade discount is 10%. So 10% of 1 lakh is 10,000. So the amount is 90,000. This 90,000 is a purchase price. Right? Now, 50% is a cash transaction. And 50% is credit transaction. So 50% of 90,000 is 45,000. 45,000 we have paid immediately. On this we get a cash discount. So deduct the cash discount. Less cash discount. %. So 2% of 45,000 is 900. So this is the amount $44,100 and GST rate is 9% each. So we will add CGST 9%, add SGST 9%. So 9% of 44,100 is 9 ones are 9, 9 fours are 36, 9 fours are 36 and 3, 39. So 3969. So 52,338 he will pay right now, and 50% is credit transaction, so it is 45,000, on which we will add CGST 9%. So we will add it. So 53,100, which is not yet paid. So we will pass the journal entry. So purchase account, expense, it is an expense. It is increasing in the business, so it should be debited. Input CGST and input SGST. As I told you, it's an asset, because it is recovered, it can be recovered. So they are assets, they are increasing in the business, so they should be debited. Bank is an asset, it is decreasing in the business, so it should be credited. Tarun is a creditor. It's a liability for the business, and it is right now increasing in the business, so it should be credited. Apart from this, one more account, that is discount received. Discount received account. This is the income for the business. It is increasing in the business right now, so it should be credited. So now we will pass a journal entry. This is an analysis I have shown you, while to make you more better understanding about it, the transaction. Now the journal entry will be purchase account debited with 45,000, CGST, input CGST account debited with 8019. This both will be added. This 3969 plus 4050 and 4050. This will be added. So input SGST account debited with 8019 to bank account. Bank account will be credited with 52038. discount receipt will be credited with the amount 900, and to Tarun, he will be credited with 53,100. So this is being goods purchased at 10% trade discount and 9% GST, 9% SGST, half payment made. So this is about the transaction of purchase involving GST. So I am taking another transaction from the illustration number 2, page number 12.16, and this is the last transaction given in illustration 2. This transaction says sold goods to Zorawar for rupees 2 lakh less 10% trade discount plus CGST and SGST at 9% each. Received half the amount by check and allowed 2% cash discount. So first of all, we will make some calculations, all the calculations what we needed. The list price is 2 lakh less trade discount, less trade discount, less trade discount, that is 10%. So this is 20,000. After deducting 20,000, it is 1,80,000. This is sale price, right? If you analyze the transaction, this is half the amount received. Means 50% is a cash sale and 50% is a traded sale. So 50% cash sale and 50% traded sale, right? So 50% of 1,80,000 is 90,000. 50% we have received the payment. On this amount we will allow the discount. So less cash discount 2%. So 2% is 1,800. We will deduct it. The amount comes 0, 0, 10 minus 8, 2, 9 minus 1, 8. 88,200, on which we will calculate CGST and SGST. We will add CGST 9% and add SGST 9%. So 9% of this is 9 2s are 80, 9 8s are 72, 72 and 1 73, 9 8s are 72, 72 and 7, 72 and 7, 72 and 7, 79, 79, 38. So if you total it, it comes 1,04,076. This is the amount he is paid, we have received, and for credit transaction 90,000 at CGST 9%, at SGST 9%. So 9% is 900, 900, 9 nines are 81. So the amount receivable from him is 1,06,200. So now we will see what are the accounts are involved. If you go through the transaction, the accounts which are involved is sales account is involved, Zoravar account is involved, discount allowed, CGST, output CGST, output CGST, output SGST, and bank. This sales is an income for the business, and it is leasing, so it should be credited. Zoravar is a debtor for the business, so it is increasing in the business, it should be debited. Discount allowed, it is an expense increasing in the business, so it should be debited. Bank, increasing in the business, so it should be debited. Output CGST and output CGST and output SGST. Both are liabilities. They are liabilities. They are increasing in the business. It should be credited. So the journal entry will be passed with bank account debited. Bank account debited. It should be debited with 1,04,076. Discount allowed. Account debited. It should be debited with 1,800. For our account debited. For our account will be debited with 1,06,200. To sales account, sales debited with 1,80,000. To output CGST, to output CGST, $16,038, and SGST to output CGST to put SGST 16 and 18. So this is all about the sales and purchase transaction. Rest we will discuss in our next class. Thank you.